Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today we will take a look at the euro currency again. Actually, not because the euro currency has and shows some really big shifts in the price action, but we need to clarify some moments that right now are forming here. If you remember, our major concern was about the depth of this retracement, because market surprisingly has rebounded from this major FIB support, and that was in fact the edge, the crucial point for overall short-term bullish scenario. So if market suddenly would drop below it, then we probably will say, we could say that overall bullish setup has failed, and we need to watch for downward continuation. If you remember, we have actively discussed this moment when the market stands right in this area. But we have right now the V-shape reversal, or some kind of V-shape return back to the upside action. At this upward action, market also has formed important pattern, this bullish grabber that suggests the taking out of this top, at least taking out of this top. And right now, since this pattern is valid, and it will be valid even right to the 108 area, because this low mostly coincides with the FIB level, with these lows, and they will, if they will be cancelled, they will be cancelled simultaneously as this overall bullish setup, as the grabber. So right now our major concern is with the depth of this possible retracement. So where market particularly could turn to the upside. Actually, guys, I am not sure that we will get any significant action before non-farm payrolls release. It will be very interesting to take a look not even on the employment data, but mostly on the wage dynamic. So, is there any inflation in the wages right now? This will be very important. Also, guys, it's really interesting that Atlanta Federal Bank has the forecasting model, its regression model that forecasts the gross domestic product in the United States. And right now the data shows that gross domestic product in the first quarter will be below the 1% growth, compares to 1.4 growth in the fourth quarter. So we see a real slowdown of the economy. Yes, they've also got the poor data on the United States economy. And right now, guys, today I have read some comments and already see that the big banks and the brokers already put careful comments in their messages to clients that they do not exclude returning back of the Fed to the dovish road. So they are already start to think that probably Fed will have to step out from its hawkish policy. That's in fact, guys, what we are talking about in the recent 2-3 weeks. Recall our talks after European Central Bank meeting, after the Bank of Japan meeting 2 weeks ago, that have happened right before the Fed meeting, and we said, guys, this is the currency wars. They take the steps to make their currency weaker, and that's why, since the Fed has barely better situation in the economy, they will have to they have no choice. They will be involved in this currency war, and they probably will not be able to support the hawkish policy in the long-term perspective. Right now, already by the result of the recent Fed meeting, we already have 2 times less rate hiking in the current year. So previously it was suggested that the Fed should rise rate 4 times on each quarter. The rate should be raised, but right now it's only 2 times investors expect in June and sometime at the end of the year. So what will happen after gross domestic product release? What will we get on non-farm payrolls data? It's very interesting, and how Fed rhetoric will change the result of these numbers that we will get? It's another question. So I just talk about it because currently it seems not impossible that euro could appreciate on changing of the Fed policy and turning to the dovish road. If this will really happen, euro will appreciate because will start to grow, because right now the Fed policy is priced in the current rate right here. But if policy will change, the rate should be priced out. These moments that previously was priced in, and priced in was the 2 rate hiking already in the current year. So our prediction is really possible here. Right now is question where it could start. Our first area that we have discussed to watch for is around yearly pivot point. This blue line is the yearly pivot point. And take a look, market has formed the bullish grabber here on last week. That is still valid. But my opinion, guys, is that probably market should show another leg down. Why? Because take a look at this moment. Here market was just a few pips out from the taking out of this top. Whether market makers could just push market slightly for a few pips higher, grab the stops, close their positions and turn down. Whether market wasn't able to show the wash and rinse of this top, probably it was possible. But somehow this hasn't happened. Market turned to the downside. This retracement is too small. It's approximately 100 and 150 pips maybe, to change overall opinion and situation. I did not see a really big difference between this point and that point. So I think that probably this points on deep retracement before upward reversal, if it will happen. Maybe this reversal will happen particularly at the non-farm payrolls release. Who knows? Especially if that data will be poor. We could get it. And finally, we could get our possible butterfly that we have discussed. Right? So if you have taken the position based on this grabber, you probably have done well, because still right now on the poor data that has been released yesterday, you could move your stop to the break even and just watch what will happen. Right? Because this grabber is still valid that we have here, as you can see, because loss still hasn't been taken out by the market. Market still stands above it, so you can just move your stop to the break even and watch what will happen. Maybe something will happen today that will push market high. It's also possible. But guys, based on the recent action and based on the fact that market has turned down right from the few pips from the top, makes me think that hardly we will see immediate action to the upside. We probably will get some deep retracement down. That's just my opinion. It is not based on some patterns, but it's just on the common sense. It's based on the common sense of this overall situation. Well, on the intraday charts, I also see some signs that probably could relatively confirm that. So on the 4-hour time frame chart, we have this rebound from the confluence support that we have discussed. This market stands above it. This is lows of the grabber. Market has started move up yesterday on this data, but this upward action looks a bit heavy, so it's a bit lazy. Not really fast. Would not see something of that sort here. Also take a look. Market has struggled, has challenged the weekly pivot point, but has failed to pass through it. Right now turning down. This is not the normal reversal where market has the target to take out of this previous top. This is some kind of the bounce out from the confluence. Even the poor data on the United States haven't been possible to push market higher. On the hourly chart, we have approximately the same situation. So recall this channel that we have discussed previously. Yes, market has broken it, or better to say, it has abandoned it by this flat action. It's not quite the breakout. Breakout usually shows the action in the opposite direction. But here, market just abandoned this channel by the flat action, moves above this previous consolidation, but right now dropped again below it. So this action, guys, it's not some reversal. It's not the thrusting action. It's not the impulse action. It mostly remains the same. As you can see, choppy and sloppy action with a lot of overlapping candles, long tails in the candles. So it doesn't look like a real breakout and doesn't look like upward continuation, at least right now. Maybe today, tomorrow something will change, but right now I don't think that this is really the reversal. So my opinion is that so personally I do not want to take the long position right now, guys. Maybe I will be wrong, and if we will see some upward action here, continuation, some thrusting action, maybe we will change our opinion. But right now it seems that we still could get another leg down before real reversal will happen. And I suspect that probably if this reversal will happen at all, then it really has the big chance to happen right at the non-farm payrolls release. And by this conclusion, I still stand on opinion that we could get some action right to the 110.20 FIB support. This probably will be the area that we will be watching for as a potential point where the market could reverse up again. So if we will calculate the probable ABCD pattern here, it will lead us right to the same area. Maybe we will get this. So let's see what really will happen. But guys, again, if you have taken position already by this grabber, just move your stop to the break even and watch what will happen, because you right now stands in a good position. You have the profit position and you have no risk. That's just what every trader dreams about. So if somehow market still will turn to the upside, then you will be in favor. So let's see what we will get.